if I was the god of entrepreneurship, and I'm not, of course, I would say to every entrepreneur, look, there's 5 or 6 numbers, depending on what type of business you have, that you should track. And if you can just track these 5 or 6 numbers every month, then it will give you the clarity you need to then make wise decisions about how do I actually make my business more profitable next month. And so these are really simple. First one is, what was my revenue? Now, as entrepreneurs, we're all really good at this. We know what our revenue is. What was my revenue? The second one is, what did I pay myself last month? So whether that's as a salaried worker within your business, or whether that's owner drawings or owner distributions or bonuses, what did I physically pay myself? So not like I spoke to a lady yesterday, says, well, my accountant says I pay myself this much every year. It's like, but I'm not quite sure that I actually do.
Are you a scaling SaaS founder? Ready to make the leap from leading a team to leading an organization? Join us each week as we refill your think tank with actionable tips and strategies from great business minds you know and those who don't know yet. This is SaaS Fuel with your host, 5-time entrepreneur, SaaS founder, and globetrotting adventurer, Jeff Maines.
Welcome back to the SaaS Fuel podcast, where Cashflow doesn't just keep the lights on. It is the rocket fuel that takes your business from surviving to scaling. I'm your host, Jeff Maines. I help B2B SaaS founders like you grow from traction to scale. Here, growth is more than just numbers. It's about crafting a future-proof company, premium valuation, and leaders who build a business of significance while living epic, adventurous lives. When it comes to your business finances, are you the boss, or are you just hoping it all works out? Yeah, too many entrepreneurs build amazing products, lead incredible teams, and chase growth. But when it comes to their numbers, they kind of cross their fingers and hope the bank account balances at the end of the month. Spoiler alert, that's not leadership, that's luck. Sometimes it goes really well, and other times it's a tragedy. But in this episode, we're flipping the script on financial management for entrepreneurs. You'll hear why you don't need a finance degree or a high-priced advisor to be the money boss of your business. We'll dive into the simple, essential numbers every founder must track. No spreadsheets that make your eyes bleed. How to set up your finances like a cascade where money flows the right way, and why treating your business income like monopoly money can quietly kill your dreams and your offers in the future. It's not about complicated hacks or chasing flashy returns. It's about clarity, consistency, and the mindset shift that happens when you realize that you are responsible for every single dollar that moves through your business. And once you truly understand your money, you can build a company that isn't just surviving, it is doing awesome on purpose. If you're ready to simplify your financial strategy, build real reserves, and start making every dollar count, this episode will show you the way. And it's simpler than you think. Let's dive in. Our founder on Tuesday was Micah Rimley, CEO of Robin. He helped us rethink hybrid work management. Super helpful for me. I hope it was for you as well. He shared how intentional office strategies, AI productivity tools, and a deep understanding of collaboration dynamics are reshaping the future of work for high-growth companies like yours and mine. Our expert guest last week was Roger Crawford, Division I athlete, Hall of Fame speaker, and inspirational powerhouse. Roger showed us that challenges are unavoidable, but defeat, that is a choice. His story is a testament to resilience, belief, and breaking through perceived limitations. Absolutely fantastic. One of my all-time favorite interviews. If you missed either one of those episodes, go back and check it out. My guest today is Phil McGilvray, cash flow strategist, financial literacy advocate, and entrepreneur who is on a mission to make money simple and pretty fun too. From teaching young couples how to budget using glass jars to guiding 8-figure business owners on building cash flow rich companies, Phil's approach is practical, empowering, and refreshingly clear. And we need that in our finance world, don't we? He's helped hundreds of entrepreneurs transform financial chaos into sustainable profitability without jargon, complexity, or shame. His philosophy: when you own your numbers, you own your business and your future. Welcome, Mr. Cashflow, Phil McGilvray. Hey, Phil, welcome to SaaS Fuel.
Thanks, Jeff. I'm really excited to be here today, mate. I've been looking forward to this for a long while.
I have as well. You started your career in the finance world, financial advisor, and then shifted to helping founders understand their numbers. What motivated that change in focus?
Look, Jeff, I think at heart, I've always been an entrepreneur.
Love it.
And from a very, very young age. And, when my grandma at the age of 18 taught me how to budget using physical glass jars and physical money, I was absolutely sold on the idea of teaching the financial basics. In fact, I came back from the UK because my grandma was in the UK and I was on a gap year. And I came back and I started teaching friends and, people we knew at church and anyone that would listen to how to manage their finances. And so it's always been something I've been passionate about, and then got into financial advising because I wanted to help people with the financial basics. And I think it took me 20 years to realize that most financial advisors don't actually teach the financial basics. And so I really felt a calling to leave the, I was a partner in Australia's leading stockbroker and financial planning firm at the time, and, earning seven figures. But really felt a calling to sort of walk away from that, to set up my own thing, teaching the basics. And it was interesting. I didn't initially do that just to help people with businesses. But as I stepped into the entrepreneurial world, I started to realize that here are all these amazing people that want to change the world with their ideas and with, the gifts and yet they have no idea how to run the finances for a business. And so many of them were failing. So many weren't paying themselves salary. So many of them were, running up huge amounts of debt just to try and fix it, just to try and make it all work. And,
Right.
The more I got into the entrepreneurial world, I realized wow, this is where I want to be and this is who I want to serve. And whilst I still do a lot of, helping mums and dads with their finances, my heart now is very much helping entrepreneurs who just want to get their thing out there, but just have no idea how to manage the finances. And so that's sort of the transition, if that makes sense.
Yes, yes. And that's an awesome lesson. Your grandma in glass jars. It's such a simple example,
Yeah.
but it's incredibly powerful and very visual.
Yeah. And I still have the glass jars down there, actually, in the corner. I often have them up on my bookshelf.
That's awesome.
Yeah, and it is, like you said, and that's something that's been a real gift for me, is that now everything that I do, I try to use illustrations with people so that they actually can see it, they can understand it, they can sort of, put it all together. I'm a very visual person. And so some people can learn by hearing, lots of others need to see it. And so the jars are just a fantastic example of the very basic principles of how we manage money. And in fact, it's not just about personal finances. It's, the same principles apply in business finance.
Yes, yes. What do you think it is that confuses most founders? Very smart people, but when it comes to money and finances and accounting and looking at financial statements, a lot of times it's like, I don't really understand that. What is it that's confusing about it?
Having stepped away from the financial world, I know this is a little bit controversial, but I actually think that in many ways the financial world is set up to confuse people, to then need financial advisors and to need accountants and those sort of things. And whilst I understand the accounting frameworks very, very well, I'm not an accountant, but I understand the frameworks very well. I think if you can just bring it back to basics and say, look, these are there's 5 or 6 numbers that I say to every entrepreneur, these are the only numbers you need to know. And if you can understand these numbers, and they're easy to find, if you can understand these numbers, then you're well on your way to being successful. And I think that we get overwhelmed because, we assume that it's going to be difficult. And it's not. And I think we're told that it's difficult and we tell ourselves that it's difficult. And because of that, we look for the complexity when really it's actually very, very easy.
I like that. Well, I can't leave the audience hanging. There's lots of dashboards and metrics out there. What are the few numbers that every founder should be tracking, whether it be weekly or monthly?
Okay. Well, typically, monthly is enough. And this is the thing, if I was the god of entrepreneurship, and I'm not, of course, I would say to every entrepreneur, look, there's 5 or 6 numbers, depending on what type of business you have, that you should track. And if you can just track these 5 or 6 numbers every month, then it will give you the clarity you need to then make wise decisions about how do I actually make my business more profitable next month. And so these are really simple. First one is, what was my revenue? Now, as entrepreneurs, we're all really good at this. We know what our revenue is. What was my revenue? The second one is, what did I pay myself last month? So whether that's as a as a salaried worker within your business, or whether that's owner drawings or owner distributions or bonuses, what did I physically pay myself? So not like I spoke to a lady yesterday, says, well, my accountant says I pay myself this much every year. It's like, I was like, but I'm not quite sure that I actually do. But, it's actually physically. And this is the thing that I want people to understand is, I don't want us to play in the accounting world where profit doesn't really mean profit and all those sorts of things. I want you to play in the real world. And so the real world being, what did I actually receive in my bank account as revenue? Secondly, what did I physically pay myself this month, actually received in my personal bank account? And thirdly, what were all of my expenses this month? And so sometimes, depending on what type of business you've got, we do need to then, and this is where it gets a little bit jargony, and I apologize for this. There's cost of goods sold, and then there's your overheads. Now, the cost of goods sold are those expenses that actually scale or get bigger as you take on more clients, more projects, what have you. So basically, the number of clients you've got will determine how much those costs are, if that makes sense. So that's your cost of sales or cost of goods sold. So we need to know what those are, because if you want to scale your business, we need to factor in that, okay, well, if I'm going to take on more clients, then these are cost of goods sold, they're going to get bigger too. So we just need to know that. And then the second lot of expenses we need to track are our overheads. So what are the expenses that I've got every single day that I've got this month that are going to be there regardless of how many clients I've got? So often, like, that might be your admin support, or it might be, if you've got a vehicle attached to your business, or so on. That's going to be there, and the cost of that are going to be there regardless of how many clients you see. And so they're their expenses. And very simply then we can go, okay, well, if this is my income, my revenue, and this is all my expenses. So if I take all my expenses away from my revenue, I can then see, okay, well, what is my the different countries use different terms, but what is my net profit there? What have I got actually after all of my expenses? And then we can then easily work out, okay, well, if I made 100 grand and my expenses are 50 grand and I've got 50 grand left, then that's the money that I have to pay tax on. So let's work out a percentage that I need to pay on that. So let's say it's 25% on my 50,000 I've got left. So I actually need to put aside, $12,500 for tax this month. And I put that into a separate account. So that's the fifth number, is what do I need to put aside for tax? And then the last one is, well, what have I got left? So if I use that example, I've got $100,000 that I've made in revenue. My expenses were 50. I need to put 12,500 aside for tax. Then I've got 37.5 that I get to keep. And you'll notice that I didn't factor in my salary in that calculation, because my salary, we can take that from the profit at the bottom. But if you just do that, hopefully I've made that simple enough for people. If you can just track those numbers, what was my revenue? We need to know what we need to put aside for salary. And the reason we need to know that is because we need to know, is that enough to cover all my household expenses? And am I paying myself properly? And all those sorts of things. Then what were all my expenses as number 3, cost of goods sold and overheads. And then we've got, what do I put aside for profit? And then what have I got left? And if we can just track those, and I can tell you, for most businesses I work with, if you've got a clean bank account structure, which I really encourage people to do, is have a very simple bank account structure. If you've got a clean bank, really you just need to go to one transaction statement for your business operating account, and maybe a credit card statement, and all the numbers you need are there. Like, you don't even need to wait for your bookkeeper. All your numbers are there. And the problem we've got, and the reason I say all your expenses, is when we look at our P&L. So a lot of people would have probably just heard that and go, well, that's my P&L. And I go, well, in theory it is, but it's not in reality, because your P&L doesn't include like debt repayments that you're making. It doesn't include the money you've paid in tax. It doesn't include major equipment purchases. So if you've got, like I know I built my own budgeting software, $300,000. That's money that doesn't actually get included in my P&L, because it's a major equipment purchase. It doesn't include what I've paid myself as a salary, unless I pay myself as a W-2, or as a paid employee. So all those numbers aren't actually in your expenses in your P&L. And so it's very, very easy when you get to the end of the month and you go, well, end of the year, and the accountant says, oh, well, you've made a profit. And you go, well, where is it? Because it's not in my bank account,
Happens a lot.
Oh, yeah, it does. Happens all the time. It's not in my bank account, and I don't have money set aside for tax and all sorts of things. And this is where life can get very stressful. But what I want people to do is go, well, if you actually look at your bank account, you're going to see that your bank account does include everything. It does include the debt repayments. It does include the major equipment. It does include, and if you factor that into those numbers, then all of a sudden you see the true cash flow profit at the bottom there, and that is what you get to keep. And so when we see everything, not just what the accountants include, we see the accountants, what they say is, well, this is your profit, and you pay for your debt repayments out of your profit. You pay for, big equipment purchase out of your profit. You pay your distributions or bonuses out of your profit. And
Right.
so that they don't include any of that in your P&L. And so what I want and encourage entrepreneurs to do is, if we've got a clean bank account structure, it takes no longer than about half an hour a month to be able to just go, okay, here were these 6 numbers. Here's exactly where I stand. And now I can make a really good decision about, well, okay, am I happy with that number? If not, what do I need to do next month? And because we've got everything there, we can actually start to make some really good decisions about what is going to drive us forward from a profitability perspective.
So much good stuff there. And I think it does happen a lot where, I love the statement of when my accountant said I made this much. And but it doesn't really matter what your accountant says. It's what does your bank account say?
That's exactly right.
What was there actually cash that happened?
Yeah.
Because we can have so much out there. And as I see this happen too often, is companies will look and they'll say, well, we're profitable, but we've got no cash. And it's because they're investing so much, and their time to recover that investment, whether it's a marketing spend or whatever it is, may take 6 months.
Yes.
And they're looking at that and they're going, well, it looks like we made money this month, but there's no money left. What's going on?
Yeah, that's exactly right. That's exactly right. And in terms of, and you need to know what the number is, and you need to know where it's all going. So, just tracking those numbers will allow you to track and understand why what you just explained happens. Yeah.
Yeah. A company can really grow themselves to death. And it just, how?
Oh, I see
but
that
it's
all the
very
time.
easy to do.
Yeah. I see it all the time. In fact, I have 2 clients that I worked with yesterday, and I have to just say, guys, please don't let your expenses keep up with your revenue. Like, please don't and it's so hard because there's always that next thing. There's always that, that next person to employ, or there's that next technology to take on, or there's always something, and they just seem to, and it is so hard sometimes to pull them back in, because they're saying, oh, but one day I'll actually make the money, or and they never get there. And the problem is, with every layer of expense you add to your business, it makes you more vulnerable, because if you have a couple of bad months where your revenue dips for whatever reason, then all of a sudden you're not able to meet all of those expenses. And life can go from being like, you can have these $100,000 months, you go, wow, I'm earning way more money than I ever thought. $500,000 months, I'm earning way more than I ever thought. And it's great, but it's all going in expenses. I've now got these layers of employees. I've got these layers of, things that I'm committed to, and all of a sudden, just 1 or 2 bad months, and it all comes crumbling down. And so, I'm a big, I always say to my clients, like the conversation I had with these clients yesterday was, we are building, and there's a very specific structure that I encourage people to do to build their business properly so that it can go higher. And I say to them, we need to make sure that we have enough, and there's a figure that we've identified that we need in our operating account, and then there's a figure that we've identified that we need in our reserves account. And as our business grows, the amount that we need in each of those accounts also grows. So that what we're doing is we're building the base wider so that the business can go higher.
Oh, that's really good analogy. Again, very visual, which I like.
Yeah.
With cash flow being so important, there are companies out there that offer, in SaaS world, we'll do annual contracts, and a lot of times those are paid out monthly. There are companies out there that offer to front the entire year's cash for that contract at some sort of a discount. And that's, founders get pulled into that kind of a deal, sometimes willingly, sometimes don't necessarily understand. What is your take on that? Is that a good thing to do, to get all of that cash up front from a third party? I mean, from the customer that could be a good thing if there's no discount. But what is your take on that versus letting it come in over time and managing expenses with that?
Um, what it depends on how well you've set your finances up. So, for instance, like I always think about a business as finances like a cascade. So, for anyone, like whether your personal finances, your business finances, I always think about it as a cascade. And our first goal, like you think about, rain coming down on a mountain. It forms a stream that flows into a pool. That pool fills up, it overflows in a waterfall and goes down to another pool. Okay. So that's how you need to think about your finances. And our first goal is to go, okay, do I have more income coming into my pool, which is my first pool, which is my operating account, than I have expenses going out? And ideally, we want our business to be in a situation where we've got enough revenue coming in every single month so that that pool fills up and overflows, and that we're not like pouring less into the pool than we're taking out. And the problem is most people in this situation where that very first pool in their cascade, their operating account is, they don't have enough coming in. They've got less going in than going out. And so we always
Right.
continue to struggle from a cash flow perspective. So sometimes what that means we need, and this comes back to, saying people that just continue to grow themselves to death, is we never actually allow that pool to fill up. We're always going, oh, well, I've got some money, so I spend it. So what we want to be able to do is slow down a bit and go, okay, our first goal is to make sure that our revenue coming in covers our expenses going out. And then the second, and that then covers our operating expenses. And typically I say to my clients, if we don't have a budget for the business, which, most entrepreneurs don't, that's not in the entrepreneur nature, we then go, okay, well, let's work out what your average operating expenses are. And that's easy to do. If we've been doing our 5 numbers, we'll know what that is. We can then go, okay, well, let's just say, depending on how varied those numbers are each month, we might say 1.5 or 2 times your operating expenses is what we need to hold in our operating account. And so that'll then become a very clear number. 1.5 times my operating expenses, that's what I need. And so our goal is to make sure that, we've got more coming in than expenses going out. So that fills up so that we can go, yeah, I've got that number there. And then anytime it's over and above that, we can take the extra out and we can move that down into our reserves account. Now, the reason I tell you that is because obviously if we can have our cash flow in a situation where we've got that consistent revenue coming through, so that we're continuously filling up that pool, then it will continue to overflow. So ideally, having the steady cash flow is a good thing initially. But what you can then do is that our goal would then be to say, well, if more clients are going to sign up and we know we're going to get their money 12 months in advance, we know that they're not going to stop paying, halfway through the year. So there's always that advantage to paying up front. We want to build up our reserves account. And so I think having the upfront payment works if we've got a good reserve account, because what can happen is if we've got, $100, $200, $300,000 sitting in a reserves account, then it means that when we have that really big month at the beginning of the year and everyone pays for all their things up front, that can fill up. We can top up our operating account first, and then all the overflow can go into our reserve account. And then in those months then where we perhaps don't have as much revenue coming in as expenses going out, we can just top it up from our reserves account. And so if we can structure our business that way, then we can easily get to a situation where it really doesn't matter whether they're paying, monthly subscriptions or whether they're paying the subscription up front. Does that make sense?
It does. And what about the opposite, where the pool isn't filling up, and then they're essentially factoring those contracts in order to fill the pool to cover operating expenses, hoping that sales is going to continue to generate more over time to keep that cycle going.
And look, that can be a very stressful place to be, because we are then relying on that next sale of that bringing in for the 12 months to keep things going. And so that is, whether that's because we're doing it on a monthly, we're getting anything the payment through on an annual basis, or whether it's a monthly thing, it's a problem, of course.
Right.
And so, ideally, initially, what we want to do is to do it monthly so that we have the cash flow there. And I think, the problem is once you take a payment up front for the year, you're then committed for the year to provide on that. So if the cash flow, and that's a bit stressful, isn't it? When you've already spent the money, it's already come and gone from your bank account. So it does then come back to knowing those numbers and going, well, how do I actually get my business as lean as possible so that I know that I have more coming in than going out. And really at the heart of every business and personal finances, that is, we need to get to that point as quickly as possible.
Right.
So, I mean, it's always a risk, isn't it? If your business is new and you're still trying to get yourself to the point where you are profitable, then that can be a stressful thing to do initially. And I would probably try not to do that. I'd probably try not to take the monthly payment, the annual payments initially, just to smooth my cash flow, so I got some predictability about it, and you're not relying so much on future payments to make that happen. But yeah, I mean, I'd need to see the individual people to see what their cash flow looks like, but that would be my general advice.
Yeah, profit is something that was forgotten for a long time in SaaS world.
Yeah.
And that's something that has come back the last couple of years, which I think is healthy.
Yeah. It is.
Fundamentals matter.
It does. It always does. And that's what gives you peace of mind. That's what allows you to grow. And as I was saying before, like with my cascade, I mean, our first goal is my income greater than my expenses? We need to get to that first. And that means sometimes being lean and not investing in the things we'd like to invest in, but that aren't necessary right now. So keep things lean, get yourself profitable, build up your build up your operating account, and then build up your reserves account. And then from there, we can go, okay, if we've got some debt we need to deal with, let's deal with the debt. But then also from that point on, the next pull down is then, okay, we've got our operating account full, we've got our reserves account full. Now we can start to invest back in the business. And I think so often with businesses, we're investing in the business before our operating account's full, before we've got reserves, before we've dealt with any debt, and we're just forever robbing Peter to pay Paul to try and make it work. And I get it. I have so many different business owners I work with across all sorts of industries, and every entrepreneur and every business owner, they just want to grow and they just want to get to the next thing, and they want the new equipment and they want the new, the new program, and they want all this stuff. And they never actually slow down to just let themselves get in front financially. And typically that's why we end up running out of cash before we ever reach profitability, because we haven't taken the time to build the business properly.
Ready to dominate your market and skyrocket your revenue? Dive into Small Fish, Big Pond, delivering a world-class business that swims circles around competitors. This book is packed with powerful marketing and leadership insights guaranteed to transform your business and operate world-class. Small Fish, Big Pond delivers proven strategies to sharpen your marketing message, deliver unmatched value to your clients, and guide your prospects' buying journey to one inevitable conclusion: that your company is the only solution for them. Inside, you'll find step-by-step frameworks and time-tested growth principles to attract your ideal clients, convert them, and then turn them into your passionate brand ambassadors. Grab your copy today in print, ebook, or audio at smallfishbigpond.com or on Amazon. Plus, remember, every book sale supports charity. All profits go there. Always have, always will. So dive in and make a difference. Well, a lot of founders talk about minimum viable product. And what is minimum viable financial infrastructure? Maybe tools and habits for a company, say $3 to $20 million SaaS company. What do they need to have in place? Minimum viable financial infrastructure.
It's not much, mate. Look, as I said to you, I always get my clients to track 4 things every single month. And that is, the first one is to actually keep track. Like it depends. Like it depends if they're if they're actually a corporation, that's different. But typically, your 3 to 10 million sort of size companies, they're not. They're still. I'm the one that came up with this idea. I'm the one that found the money to do this. I'm the one that built this business. And so, in that situation, I'd be saying we want to track those 5 or 6 numbers, depending on whether we got cost of goods sold. Please track those. It doesn't matter how big your company is. Forget all of the ratios and the quotients, and all the things that the accountants give you. Just track those 5 numbers. And then, so that's the first thing that I do. Second thing is, I actually believe that, especially if it is a family-run business or it is a one-person business, even a 2-person business, in terms of who the owners are. Actually tracking your net worth is a really powerful thing. So business assets versus business liabilities, and then personal assets and personal liabilities, because sometimes we can lose sight of why we're really doing this. And I think when you can track your net worth every month and you can see, is what we're doing, is all our work actually leading to a better financial outcome for us and for our family? I think that's a very powerful thing to do. And again, that simply is, what are our assets in the business? What are our liabilities in the business? What are our assets in our personal life? What are our liabilities in our personal life? If you can and what's the bottom number? Am I up or am I down? And is that number improving? Like something as simple as that just helps keep you mindful of, well, what are we tracking towards? And then I always, I've got what's called a business equals bank account, budget equals bank account sort of spreadsheet that simply says, well, how much do I need to have in each of my pools? And have I actually got that in my pool? And have I either got a deficit or a surplus at this point? So I would say to, think about the cascade for your business owners. How much do you need to have in your operating account? Like, what is 1.5 times your operating expenses? What is that number? Like, have a number, have a concrete number, know what that needs to be. Now, of course, as your business grows, if we've said your operating account needs 1.5 times your business expenses, or 2 times, depending on how variable those expenses are, as your business grows, as you take on more staff, that's more expenses, which means you need more in your operating account. And so just keeping track of that, so that stays a relevant number, is really important. And I think when we have a concrete number in our head, it actually gives us a sense of peace. We know, okay, that's the number we know we need. Have we got that? And so that's what this spreadsheet does. It says, that's what we need. Have we got it? And what is the shortfall? And so we then know that our first goal within the business financially is to get that number in the bank account to match what we should have, that 1.5 times. And that just gives us focus on, we know what our next step is. And so if we go again through the cascade, then the next step is, well, how much do we say we need in our reserves? Let's say it's 3 months worth of expenses. That number is $200,000, but at the moment we've only got $150,000 in there. So we know then that we're still 50 grand short. So next month's profit, we already know where it's going to go. And then as you go down, you go operating accounts full, reserves account full, and then we get down to, well, what are the things we want to invest in? So just being able to go, okay, well, we want to actually, invest this much money in, a new developer, or, a new program that we're going to put together, a new app or whatever it might be. But we know how much that's going to cost us. And once we got those 2 pools full, then think of that new project as a pool in itself. We need 200 grand for it. So we can see that over the next few months, all the profit's going to go into making that happen. If as a business, you have your net worth tracker, if as a business you have those 5 or 6 numbers that you're tracking every month, and if as a business you have that cascade, so you know exactly what you need in each of your pools, and you have that bank account structure set up, then that's good. And with the bank account structure, 1 operating account, 1 reserves account, 1 tax account. If you can have those set up, then that makes life significantly easier for you. One of the big mistakes that a lot of business owners make is they have way too many credit cards and way too many bank accounts. And that just confuses the picture, and it makes it really hard to track where all the money's coming and going from. If you can keep things fairly concise, like a $3 million to $10 million business, really you don't need too many more than those 3 accounts. Now, you might decide that depending on your situation, you might have another account where you've put money aside for future business goals, those sorts of things. As the profit comes down, you go, that's our future, that's our pool when we're building up to take on that next project. Fine, do that. But keep things very, very simple. That would be my suggestion.
Yeah, simplicity wins for sure.
Yeah, absolutely. And I think so much of the reason we don't do what we need to do, so I shouldn't blame my nose, is because we make it far more complicated than it needs to be. But if you just did those few things that I said there, and all of those things together, like I have a process I go through with my clients every month where we've got 4 little separate spreadsheets, the net worth tracker, the 5 numbers and so on. And it takes us somewhere between, for me, if I do it for my clients, it takes no more than sort of half an hour to have all of that done, regardless of how big the company is. That's all it takes. And that gives them complete clarity on the financial health of the business. And in terms of planning forward, what are we going to do next? It's all there.
Yeah, that's good. When you're working with fast-growing companies, let's say, we're talking to a lot of SaaS founders here. How do you help them avoid scaling too fast or hiring too deep too early on?
Well, again, that comes back to the cascade, because what we want to be able to do is we want to know that. So again, if I take on a new staff member and let's say they're $5,000 a month that I've got to pay for that, then that's $5,000 a month more. So it's 1.5 times that salary extra that I'm going to need in my operating account. It's also going to be 3 times that salary that I'm going to need in my reserves account. And so as I start to see, my goal is to get my operating account full, my reserves account full. And it might not be that you get to 3 months of reserves initially, but your goal should be to at least get there. We should be working towards that. But you can also see your cash flow each month. And that's the important thing, is we can see down the bottom there, when we're tracking our 5 numbers, we can see month on month, have I been consistently producing enough revenue down there to cover another person's salary? Or, so I think if we can clearly see the numbers, we can start to make some very objective decisions to go, okay, we've got an extra 20 grand every single month. What is the wisest thing to do with that now? My operating account's full, my reserves account's full. If I take on that person, I know that I'm going to need to build up my operating account a bit more, my reserves account a bit more, but I still know that the cash flow is there. And so I can clearly see, for the last 6 months, we've had 20, 30, 50, 100 grand extra. No worries, I can take on that person. So I think, too often what happens is we have one good month and we decide, let's employ someone else. And that month with a variation, and then now we're stuck because we've got a few bad months and that person I took on is really starting to stretch us. So I think it's all about understanding your cash flow and making decisions based on the consistency of that, so that you can then confidently go, yep, we have the cash flow, we can take on that person, and we can see exactly how that's going to benefit the business.
Yeah. What is a mindset shift that founders need to make if they want to build a business that's sellable or fundable, helping them, think like investors?
That's a really good question. I would say, firstly, make sure that you're not a key part of that business, if that makes sense. You need to be, every part of your business needs to be replaceable, systematized, your operating procedures, those sorts of things, so that anyone can actually step in and do that role. And I know that's not necessarily financial, but that's the first thing that someone's going to look for. If you're the head of the company and it all revolves around you, then you're going to be very hard to replace. So that's not going to be helpful. From a business perspective, what also people will want to see is, and I'm working with a client at the moment who, the cost of goods sold within a business are really important. So because that will then affect the scalability of the business. So if you're saying, as you need to know the ratio of, as I take on more clients, I'm going to need to take on another developer or another client success manager or what have you. So just knowing your ratios behind how does your business operate, and let's say for every new 100 clients I take on, I know I'm going to need a new client success manager in there. That's going to be important that you know that, so that when someone comes in to buy that business, they're going to be able to see the scalability of that business. They're going to be able to see, okay, if we want to grow this business further, what are the additional costs going to be for us, and how is that going to work? So being very, very clear on that is going to be really important. But also the thing that, any business, anyone coming in wanting to buy your business, they want to see cash flow profit. Okay. They don't want to see accounting profit. They want to see cash flow profit. Is there money left over at the end of the month? They also want to see that you've been paying yourself as an owner. They want to see that there is actually money coming out. The owners, like if I buy a business off you today, I want to know that that business is profitable today, that if I step into your shoes, I'm going to be able to pay myself the same salary you were paying yourself, and then there's still plenty of profit left over. So they're the sorts of things that I would be focusing on. But that cash flow profit is a really big one. The revenue, like if they're astute business owners, or whoever's coming in to buy your business, they won't care about revenue. They'll care about what's actually left after all the expenses. So that is the thing you need to be focusing on. That is what makes a business profitable. I always say to someone, a business is a great investment. So if you go and buy a business, it's a great investment as long as you know that business has a history of being profitable. And as long as you know that you can step into it and do exactly what the previous owner's been doing, it's sort of very, very easy to follow that process.
Yeah, I think that's one of the things that is overlooked a lot, is that somebody can actually step in there and you can step out.
Mm,
And then it keeps running. That you don't have
yeah,
to be a part of that machine. You're not the
yeah.
one that's turning the crank to make the dollars come out.
Yeah, yeah, that's exactly right. And
Uh,
not even necessarily you step in, but you can employ someone to step in for you, and it's still
right,
profitable.
right.
And that's where again it should be very, very systematized. Like you need to focus on how could someone step in, and this is where if businesses build their software around the face, a brand face or something like that, that can cause problems. So you actually want to not do that. You want to make sure that it's more focused on the actual software, what the software does for their clients.
Yeah. Well, I'm sure that there are SaaS founders listening who maybe avoid numbers or feel overwhelmed when they get too deep into it. What is one small reframe that can make financial leadership feel empowering instead of painful?
Did you know? I was writing about this yesterday, and I've been financial coaching or advising or consulting for like 35 years now in one form or another. And it was interesting as I reflected on it. I've created a a program for both my personal finances and my business finances called Money Boss. And the reason I've done that is because you need, I think, to be financially successful, you need to choose to be financially successful. Um, and I'm not at all one of these woo-woo kind of guys at all. But the more I spend time with people, and especially with entrepreneurs, the more I realize that you can't, if you want a successful business, you can't hide from the finances. You actually need to choose to step into that identity of a money boss, to say this is important. I'm not going to hide from this. If I want to actually be in charge of my money, I want to have a successful business, I want to have a business that I can sell, then I have to take some responsibility, some ownership of understanding where the business is at. And so I'm not saying you need to get into all of the financial metrics and so on necessarily that your accountant's throwing at you, but there needs to be a dashboard, some kind of dashboard that you can put together or someone can put together for you, but that and you understand what those numbers are. And so you can't hide from it. I really believe that, and it's a choice. And I think we can say to ourselves, it's hard. We can say to ourselves, I can't do it. We can say to ourselves that it's not important, or that if I just make enough money, it won't matter.
Right,
But
right.
you're just lying to yourself. And the thing is, get someone that can explain the numbers to you really simply. Get someone that can show you what numbers you really need to know, and then own that. Like, own that. How do I get those numbers? How do I look at them every month? And how do I interpret them? And again, like the numbers I was telling you before, that's really all you need to know, and they're not hard to interpret. Like it's very, very clear. But I think taking on that mentality of, I am a money boss, I am in charge of this, I understand this, and because I always say to people, the the practical, the numbers themselves, knowing how to do the numbers, like the how, that is easy. If
Sure,
you
sure.
first decide to step into that, I am gonna own this. And I think that's the first step. Decide you're gonna own it, decide you're gonna take it serious. And once you decide that, then actually the numbers are really, really easy. But the problem is, and I see this all the time, is people will tell themselves it's hard. They'll look for every excuse as to why it's hard and why they can't do it. And
Right,
therefore
right.
they don't persevere to actually learn what they need to learn. Um, and so they've set themselves up for failure from the start. But the people who say, no, I'm serious about this, I am going to become the money boss, I am going to take control, and I'm going to understand and learn the numbers that I need to learn. Once they make that decision, it becomes infinitely easier. And I can tell you that it's not hard. Like, the numbers you need to know aren't hard. Like, a 10-year-old could do it. The financial world isn't nearly as complicated as you think it is, or as you've been told it is, or that you've been telling yourself it is. It's actually so much simpler when you just focus on some very simple numbers that will tell you exactly the financial health of your business.
So good. What's one thing that you wish every founder truly understood about money?
Well, that it's not hard.
That's good.
No, honestly, most finances that you need to know as a business owner is not hard. And I really, and having been in the financial world for a long time, and things like I was speaking to someone yesterday. I had a guy in Canada who reached out to me. He was thinking he was going to go see a financial advisor, and I said to him, "Well, what do you think it is that a financial advisor is actually going to do for you?" And he rattled off this list of things. You know, he's going to help me invest more wise. He's going to show me where I should take that money from. And I said, and then I showed him actually what the fees what that would impact like on his portfolio over the next 20, 30 years. And he was going to lose about $4 million in fees.
Wow.
So like from what ultimately would be a $10 million portfolio, he was going to lose about $4 million because of the impact of the fees coming out in MERs. And I said, so do you think for $4 million, you could actually take an hour or two to actually learn the basics of finance? And here's the thing, most like 85% of professional fund managers can't outperform the index in terms of, their stock picks.
Right.
So why would you pay them the fees to do that when, I could teach him in a couple of hours exactly how to look at things and what to buy and so on. And so I do think that we tell ourselves it's hard. And because we tell ourselves it's hard, we'll pay anyone and everyone ridiculous amounts of money to do it for us when really it's not hard. I could teach the basics of finance to anyone in just a couple of hours. Take the time to learn it, own it, and then, you will save yourself huge amounts of stress and you'll know exactly the heartbeat of your business.
That's such good advice. And I think it's empowering as well. I mean, because
Mm.
once you have that knowledge, nobody can take it away.
Exactly. That's exactly right.
Yeah.
And this is something that I'm so passionate about. This is why I stepped away from advising and managing other people's money. It's like, no. Please don't do that. Like, please learn it yourself, because the basics of finance are really, really, really so simple. Spend less than you earn, whether that's personal finances or business finances. Like do that in both, and set your business up, and your mindset around your business needs to be this, because so often within our business we treat the money within our business a bit like monopoly money. Like it's like, oh well, it's an investment.
That's true.
It's an investment and it's tax deductible and all these things. And we tell ourselves all these wonderful things about the money we spend within our business. But every dollar we spend within our business is a dollar we don't get to take home, or it's a dollar we don't get to use to build the financial stability of our business. So it is about having someone, or, being that someone, different people, different personalities, who can just say, no, first, let's focus, let's make the finances a priority. Let's build this business sustainably. And it really just means let's make sure we're consistently spending less than we earn so we can build our reserves, we can build our operating account. Let's just do that so that we're here for the long term, not for the smash and dash. Let's quickly grab some money, actually build the business properly. And it's not hard. And I just, this sort of, you can tell I get very passionate about this because my job, what I've stepped away from the advice world, is just not with the advice, but to educate and to empower so that people can do and understand this themselves. Because it's not hard. And I truly believe, and I know this very much of the stockbroking world, is that they will make it seem far more complicated than it really is, so that you think you need someone else to do it for you.
So good. Well, where can people learn more about you online?
Well, philmcgilvray.com. I've got a website there, but LinkedIn as well. I've got a book called The Cashflow Fix, which I can give you a link for if you like. If they wanted to learn a bit more about that. I've also got I've got a free training that I'm happy to give you the link to, that is just those 5 numbers. What are those 5 or 6 numbers and how do I track them? And if anyone's interested in having a look at that, I'm happy to put the link in there. As you can tell, I'm very passionate about what I do, and I just want to help people. So, if that's going to be helpful to you, just grab that and have a look at that.
Awesome. Yeah, we'll definitely include that in the show notes and, of course, a link to your site as well.
Yeah, thanks, mate.
So good. Phil, it's been an absolute pleasure having you on the show. Thanks for being on SaaS Fuel.
Thanks, Jeff. I'm super excited to be here. As I said, I've got my own budgeting software and stuff, so very much understand the costs and the intricacies of building your own software. And so, yeah, really excited to be here.
Absolutely. And everybody should check out Money Boss as well. We'll put in a link for that too.
Yeah, it's something that I'm developing. So absolutely, yeah. Look, I've got I've just started actually a new school. I don't know if you know School, the school platform, which is like a community platform. Yeah, I've literally just in the last couple of days set something up there, which I'm hoping to build that for, entrepreneurs and business owners, because this entrepreneurial journey can be a very, very lonely place, and we don't like talking about money. So I actually want that to be a very safe place for business owners just to come and share ideas and to learn from each other. And, one of the big privileges I've had is being able to see under the hood of literally hundreds of different businesses, from startups to 8-figure, 9-figure business, to see how those numbers actually work, what works, what doesn't. And so from that, I've learned so much about business and what works in different scenarios. And when you bring a whole bunch of different business owners together, you get the same effect of that. And so, yeah, I'm very excited about that.
Outstanding. Make sure and link that in the show notes. Phil, again, absolute pleasure having you on. Thanks for being on SaaS Fuel.
Thanks, Jeff. It's been a privilege.
Thanks again, Phil, for coming on the show and sharing your insights and resources. You can learn more about Phil at philmcgilvray.com. As always, all links, highlights, resources, and full show notes are available at saasfuel.com. And be sure to check us out on YouTube as well at Champion Leadership. We have full video episodes, training, outtakes, shorts, more, lots of resources over there for you. And thought leaders share. Share this episode with someone who's committed to becoming their best self, maybe like you are. Everyone who shares this week gets a Tamagotchi that runs your hustle and cries when your cat goes up. Anybody remember Tamagotchis, like your kids? My kids played with those. Kind of crazy. Think about how long ago that was. And the people listening to this show, you're like, Tamagotchi. I hadn't thought about that in years. Yeah, well, here you go. If you don't know what that is, you can probably Google it. What if the key to scaling your company wasn't just about building product, but about building the right go-to-market leadership team? Next time, we have a special double episode, two awesome people, Harry Masters and Uddhav Mehta from Inflection Group. They'll be here to reveal how high-growth tech companies are winning by hiring world-class go-to-market leaders. Then, what if your brand story was the secret weapon for dominating your category? 1 week from today, we have Adam Coughlin, co-founder and CMO at York IE. He joins us to share how startups can craft foundational messaging, build a strong digital presence, and turn founders into market-shaping voices. So good. I will see you next time, and as always, enjoy the journey.
Thanks for listening to SaaS Fuel. Full show notes for each episode, which includes a summary, key takeaways, quotes, and any resources mentioned, are available at saasfuel.com. Be sure to follow and subscribe wherever you listen to podcasts. And if you're enjoying the content and getting value from these episodes, please leave us a rating and review at ratethispodcast.com/saasfuel. We'll be sure to read these out on future episodes.